It has seen one of its strongest jump, or call it appreciation, in recent times. But what is driving this appreciation? And are concerns or sustainability well placed or not? You heard the analyst, the argument on the fiscal side, but some have said that the Ghana Cedi is about the Bank of Ghana. And that is why on PM Express Business Edition, we are privileged to engage the first Deputy Governor of the Bank of Ghana, Dr. Zakari Mumuni, to get more thoughts about what is driving the Cedi's good run. And the concerns out there is about, is this sustainable? Doc, thank you so much for your time. And I believe that it is not out of place first to congratulate you on your appointment as a first Deputy Governor of the Bank of Ghana.
No, thank you very much, George.
Since this is our first formal engagement, I would want to ask for you, what did you make of your appointment when the President indeed called on you to assist Dr. Johnson Isiama as the first Deputy Governor of the Bank of Ghana?
Well, thank you very much, George. I saw it as, first of all, let me thank the President for the opportunity to serve in this capacity. Having been in the bank for these number of years, I understand exactly the level of responsibility that comes with this position. And I guess my role is to assist the governor to really, in the achievement of the objectives, primary objectives, and then the broader goals of economic progress for the country. And that's exactly what we have been trying to do as a team so far, and I'm sure you would have really seen some of the...
You didn't come from outside, you were already in, and not to get into those fine details. I mean, how has it been so far? I mean, your playground, financial market, research, modeling, forecasting, and now you moved as the first Deputy Governor and Assistant Dr. Johnson Isiama. Wherever I see Dr. Johnson Isiama, I see you, and more of like a Siamese twins, Doc.
Well, that's very true, and it tells the fact that we are really a team and, quite frankly, working really closely together. The governor is somebody I had worked with already, first as staff members in the research department, but also when I was special assistant to the governor, then he was then the second deputy governor, and so I had already worked closely with him, and working with him is really like a comeback. Yes, it's a very friendly and quite close relationship I actually have with him.
From where are you coming from when you used to work in financial markets? And for our viewers who might not know that, for a fact that one of the areas that was your playground was the Cedi and all those things. Now, we've had a lot of pontification outside and all those things. From the Bank of Ghana's perspective, what is accounting for the Cedi's stability and the sudden good run that we've seen, the sharp appreciation? Some have said that, because of the dollar doing well and all that. From you work with the numbers, and you speak to numbers and you speak to data. What is the Bank of Ghana's perspective, as in what is driving this good run?
First of all, let me say that the Cedi, as you know, has had this good run. And of course, for a person like you, this shouldn't come as a surprise. I'm sure we had, intermittently discussed this much earlier.
Yeah.
And then I told you that the central bank was actually in a very good position to be able to ward off any pressures.
I did doubt you, and I remember in that conversation that I raised my consent.
Right, and I'm sure you have seen what is happening today, and so it shouldn't come to you as a surprise now. Whatever we say, I think you should consider it seriously. Now, year to date, we've had the Cedi appreciating by over 12%, specifically 12.2%. appreciation from the beginning of the year to now. Now, the same time last year, we had depreciated by about 13%. So this is a complete reversal of what the situation was, last year. Indeed, this is maybe unprecedented, you can put it, because if you look at the data from when we started, the floating rate regime up to now, the flexible exchange rate regime up to now, this is the only time within the first 4 or even 5 months that we have had this level of strength in the Ghana cedi. And well, you will say the drivers are broad-based.
Yeah.
And rightly so, as has been mentioned in many circles. You have the domestic factors playing a role. You also have some part of it coming from the external environment. Now, but as I will just conclude now, you will see that the domestic factors really have more weight in this case, in this performance, than the external factors. And so it just simply reflects the careful mix of policies that are being implemented. First, we can talk of the monetary policy stance.
Yeah.
I'm sure when we raised the policy rate, a lot of people, including Guta, came after us. They had all kinds of comments.
And even analysts as well, they were not happy about that stuff.
They were not happy, but we knew exactly what we were doing. And it's the fruits you are beginning to see. So we lifted or tightened monetary policy for one reason, to make sure we re-engineer the disinflation process. How did we do this, or how do we expect this to happen? First, that was supposed to help us increase or support our liquidity management operations. I'm talking about sterilization of cedi liquidity now. And if you look at the data, you would have seen that we've been very, very strong on liquidity sterilization, cedi liquidity sterilization in the system. And so this is really, really helping. And we are doing this through our open market operations. So this is really helping a lot to take out cedis from the system. And that is actually linked to the policy decision that was made. This is even being supported by the earlier decision on the cash reserve ratios, which has already sterilized some cedi liquidity in the system. And so if you add that to the part that we are also having to do with the open market operations, that's quite a lot. So on the policy side, this is what it is. So that was a careful policy decision. But again, you can talk of the fact that we have also had robust FX inflows. And that is really contributing to an accelerated pace of accumulation of international reserves, buffers. So if you look at it, just to start with, if you look at it relative to, that is the first target under the IMF program. So this is a very serious target that we really have
reserves
to.
I'll be coming back to get more on the reserve issue, but Doc, there are some who have also argued that if you look at your intervention on the market, and I stand to be corrected even from your end as well, the Bank of Ghana has been quite heavy on the market in terms of liquidity support, and some of the figures are looking at even more of like even $500 million and all that. And some would say that if any market that you have the central bank being that heavy on the market, obviously you will see its local currency strengthening. And that could be one of the major reasons why we are seeing this. And how long can the Bank of Ghana be fallen on its reserves to support the local currency? Help me if I'm wrong.
Yeah, I like this question, but as you would see, if we were that very heavy in terms of our support to the market, you will also see that we will not again be able to be doing that well with our reserves accumulation. But if there's one thing under the program, that IMF program that we have done well as a country, first of all, it is in respect of the reserves accumulation. So that means that we really have been doing very, very well in terms of managing our reserves. So first, you will see that I mentioned earlier that if you look at the IMF program, we have already achieved the reserve target. We have already achieved the reserve, and these were very ambitious targets that anybody would have doubted if we were going to be able to achieve these, target. The target at the end of the program period is 3 months of import cover. As we sit here now, we are above the 3 months of import cover. We currently are around 3.7 months of import cover. That is using the IMF metric.
Yeah.
If you even were to look at it broadly, including the petroleum funds, which also belong to Ghana, we are even around 4.7 months of import cover. So that's quite a lot. So what this tells is that we just have devised, a very, innovative way of meeting the market demand while really, still accumulating the external buffers. So you will see that whatever we are doing, currently is actually having a lot more weight on the accumulation of external buffers, the reserve, international reserves, as against, support to the market. We have strategic ways of really meeting the market demand without necessarily affecting the reserves.
And Doc, that is what some will say that help us, because for some, when they look at your intervention on the market, the layman scenarios they want to draw is that Dr. Johnson Isiama and Dr. Mumuni and then Matuda Santi are drawing down on their reserves to shore up the Cedi's standing on the market. And that is the argument many people are making outside.
Unfortunately, if this were to be the case, then the market players are very smart. They would have read into this, and then the rally you are seeing will be, short-lived. They wouldn't trust you. They will see through that very quickly. On the contrary, you will see that we are even accumulating reserves, much, much faster than what has been anticipated. And that is why the market really thinks that, this can be sustainable. And we actually are going to ensure that this is really sustained. It's because of what, where we are now. This time is different. If you look at the reserves we have now, these are not debt-creating reserves. These are organically accumulated reserves that are very, high now. At the moment, we are talking about reserves in excess of 10 billion.
As ending April or?
As ending April. And we even expect this number to hit, some 11 billion at the end of the second quarter. This is far in excess of what is expected under the IMF program. And that is what is actually giving a lot of, confidence in the system. And then you see, the Cedi rallying. But let me also add, it's not just the reserves, factor. There are other reasons why the Cedi is having the current rally. You will recall a few weeks ago, we had the SLA with the visiting fund team.
Yes, the staff level agreement.
The staff level agreement, the SLA. So what that, really has meant to the whole world is that things are really changing in the right direction. Alongside this has been the disinflation process that has resumed. You see inflation, moving from about nearly 24% to now about 21.2%. This means that, really we are moving in the right direction. You also have the reserves, which we have already spoken about, really increasing quite a lot. You have the fiscal that is now being put on the part of consolidation. You will see that relative to the same period last year, in terms of even the borrowing, you would have seen quite, a strong slowdown in the PSBR, public sector borrowing requirements. All of these put together, alongside our strong sterilization, which is also moving, really quite strongly. We have sterilized about 3 times the amount that we did last year. So that means that we are managing the Cedi liquidity, but at the same time ensuring that the forex requirements in the market are met.
Look, I'll be coming back to get your thought on people who are worried about the sustainability issue and going forward, what is the Bank of Ghana going to do? But Doc, I also want you to help me out some 101 here in terms of explanation here about the composition of the Bank of Ghana's reserves. I mean, I remember there was a story, and I stand to be educated, that somebody was telling me that the Basel Group is now encouraging central bank regulators to quantify gold reserves as part of their portfolio of reserves. When I tell somebody on the street of Abosokan that Bank of Ghana has reserves of 10.7 or 11 billion, I know what the IMF metrics are, but help me out to appreciate that. Is it the gold component of reserves that we know where the traditional Bank of England thing, a little bit of dollar cash, a little bit of holdings in the New York bank. If you can help me to appreciate this, I'll be grateful, Doc.
Right. No, thank you very much. So, yes, so in terms of composition of the reserves, we have various, assets. But broadly, you can say we have the dollar, holdings.
That's
and then
cash.
we also cash.
Okay.
And then we also have the gold holdings. Now, the dollar holdings would not only include cash, but it will also include our investments in other, assets, including, say, the U.S. Treasuries. So these are the broad, composition of the reserves that we have. So, but that's an important point. Gold has traditionally been a reserve asset, and so it's part of the reserves.
But we're not doing that in the past.
So
we started building up strongly recently.
Right. No, we had not done that in the past. So from independence up to about June 2021, our gold holdings amounted to just some 8.74 tons. Today, as we speak, it's in excess of 31 tons of reserves, yes. And there's still a conscious effort to increase this as we go forward. But as designed now, this is actually under the domestic gold purchase program.
Yeah.
So at the start of the program, the expectation was to double the then holding of 8.74 tons in 5 years. So the expectation was to double it in 5 years. We are actually just around the third year, and we've, you can see the number of times we've increased the gold holdings.
Yeah.
And so I think on that, point, and that is one of the points that I must make, which is helping quite a lot in the reserve accumulation. But I have to mention that as designed now, you will also see that a lot of the transactions under the domestic gold purchase program are already in, dollars, not in the bullion, the physical gold that you see. So the physical gold that you see, which we publish every now and then, and it shows increases, is just a small portion of the overall reserve accumulation program. As a matter of fact, about 2/3 of the operations are already in dollar denominated cash or assets. And so that is why you will see that the issues about sustainability and whether or not when suddenly gold prices tumble, whether or not we will not be overly exposed. We are watching that very carefully, but the thing is that if you look at the operations already, it's kind of diversified. So somehow that risk is mitigated in some sense.
I'll be coming back to get more details on that one. But Doc, again, I get back to my question that you were having a program of acquiring and purchasing more gold. Help me with some education there. With the creation of the gold board, Bank of Ghana is now no longer in the direct purchasing of gold and management of gold, or what is happening now that the gold board has come on board, and what will be the role of the Bank of Ghana in terms of this domestic gold purchase program?
Thank you very much, George. This is again an important question that we have had to handle many times. So on the contrary, the bank is really working closely with the gold board in designing the arrangement under the gold board. As you are aware, the gold purchase program has been critical, and going forward it will remain so. Now, right from the beginning of the gold board arrangement, the bank has played an integral role in shaping the discussions. So as a matter of fact, we will even be part of the board. And so going forward, all that will be happening is that we really expect more formalization of the small-scale gold sector with the view that can even accelerate the gold receipts under the gold purchase program, I mean under the gold board arrangement. And so we really expect it to enhance our receipts of FX or gold, as the case may be under the arrangement.
So there are those who are worried that Bank of Ghana is no longer going to be playing a direct role in this gold purchase. Then it will have an impact on your program of buying more gold to build up your reserves. What do you tell those who have those concerns out there?
Well, that is clearly not, the case. What it is actually expected to, enhance the current program that we have by, ramping up the receipts that we get from the small-scale gold sector. Yes. So if you look at it, the only difference now is that instead of having to deal with, the aggregators we use now directly, this will be done through the gold board. And the idea will be to really put some sanity in the pricing and also in terms of even dealing with issues of smuggling. And so at the end of it all, it is expected that that should even be improving our
so you'll be playing more collaboration, more a collaboratory role with the gold board as well.
Precisely, more collaboration and that, yes.
This is PM Express Business Edition, engaging the first Deputy Governor of the Bank of Ghana, Dr. Mumuni Zakari, actually explaining to us about the issues about sustainability concerns that has been raised out there, and what is the Bank of Ghana doing to ensure that when we talk about the Cedi's sharp appreciation or stability, indeed this good run could be there for quite a long time. This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition as we look at Cedi's stability and sustainability concerns, engaging the first Deputy Governor of the Bank of Ghana, Dr. Zakari Mumuni, to get from him what is the Bank of Ghana doing when concerns are being raised about whether this good run is sustainable or not. Dr. Zakari Mumuni is the first Deputy Governor of the Bank of Ghana. Doc, thank you so much for your time. For a lot of people outside, they are worried about the good run that we are seeing. And there are some who are saying that, George, we have seen it before. What is the Bank of Ghana doing, or what is the Bank of Ghana going to do going forward? We have seen almost the first half of the year, going forward to the second half of the year, in terms of the monetary side in sustaining this good run that we are seeing with the Ghana Cedi.
Thank you very much, George. This is again an important question that you have raised. And of course, everybody will be really very, right in thinking about the sustainability of the, current trajectory we are, and rightly so because of the history. You just mentioned it because of the history.
So happened before. Some have seen that
it's happened before, and we have seen it being short-lived.
Yeah.
And so what I will say now is that this time is different.
What makes it different, Doc?
Excellent. Just look at the drivers of the current run. First, perhaps let me mention 5 points. So indeed, the drivers are broad-based. You have the careful policy choices that are being made now. Look at the monetary policy stance, quite tight and sometimes controversial. Some might even think it's overly tight, but it's because we want to get the right things done. We want to firmly, anchor inflation expectations through our liquidity operations, sterilization, and the rest. You can also talk about the reserve accumulation, which has been quite robust and driven by fundamental factors. The Gold for Reserves program. You have cocoa, which has surprised on the upside. Cocoa has really surprised on the upside. So far in the year, we have had over 1.3 billion coming from cocoa. That's cocoa receipts under the new, arrangement. At the start of the arrangement, we didn't think it was going to be this. So the forecasts really were pessimistic. But we've kind of tripled, or probably even more than tripled, the receipts from there. Now, if you also look at the third one, which is remittance flows, remittance flows have also been quite robust in the year, and that is also helping. And this is just to mention the first three, main drivers. If you look at it also, we have for some time now been engaged in policy reforms. I'm sure you are very much aware of the new reference rate computation.
Yeah.
So what that means, along with other reforms within the remittance space, is that you are actually freeing and making the operations within the foreign exchange market more efficient. So you wouldn't hear people now talk about Bank of Ghana dollar, because a dollar is a dollar everywhere. You don't have a Bank of Ghana rate that is detached from the rest of the market. So if you have the dollar, you are just better off using it rather than recourse to the central bank and putting unnecessary pressure on the central bank.
And sorry to interject rudely here. So I get from you that in terms of as part of the reforms of the FX market, there's more of a, if I could get the English word right, more simulation or more of like a merge in terms of the market rates or what is being quoted in the market, i.e. what the Bank of Ghana rates. Help me out.
In fact, so you now have a rate that has converged with the rest of the market. And so there's no difference at all. Saying, you don't have any difference.
So Georgia Afe Bank is quoting the dollar at 13 cedis, 20 pesos. Then Bank of Ghana is quoting 12 cedis, 50 pesos.
It will also be very, very close. So when George Afe Bank is quoting the dollar at 13 cedis, 50 pesos, the rate that comes out, at the end of the day, given that it is the average of all the trades that we have, what it is you will not have it deviate quite a lot from, it's a weighted average, so you will not have it deviating quite a lot from the rest of the market. And so you will see it being a representative of the market. And so what that means is that it frees unnecessary pressure on the Bank of Ghana's reserves. So if you were selling the dollar way cheaper than the rest of the market, what it means is that you will actually be imposing on yourself unnecessary pressure, on your reserves.
So what we have right now is more of a converged rate between what the Bank of Ghana is quoting and what the market is quoting. So now I can look at the Bank of Ghana rates and then I can work with that.
It is a proxy of the market, a very close proxy, or if you like, it is just the market rate. And so that is what it is. Yes, so there's no difference. And so I talked about the reforms, and that's part of it. So in addition to that, you also have the reforms that we undertook with respect to remittance inflows, and that's also helping quite a lot in the inflows that we are seeing now. We are not stopping at that. We are still in the governor announced earlier that we were taking some audits on remittance flows. The audit is almost completed, and then the idea will be to see, are there areas that require further reform? So that's the idea of the audit that is being undertaken. So if we finish the audit and we see that there are areas that need further reform, we will really do that.
Would you see the Bank of Ghana tightening the space a little bit, or introducing additional regulations in trying to, because there are some who have still argued that there's still some laxity, or if I can use the expression, or there's still some loopholes in that space. And maybe, and knowing where you're coming from again, Doc, there are some more things that more needs to be done in terms of regulating the remittance space to ensure that when, just like what used to happen in the past with gold, where we were accounting with these numbers, but a country like Dubai says that we've had X amount. And even the recent argument about the World Bank figures and the Bank of Ghana figures, would anything change post this audit?
Well, as you are already aware, the audit is underway. And what it is once it's complete and we see scope for further reform, normally we will do that. The last time we did this was sometime around November 2023, where we had to, review, actually comprehensively review the guidelines for remittances. And so after the audit, if there are ways of making it even more efficient, and we will just do that. So, but all of this normally will come after the audit is complete and we see, clearly what it is. But I am not done with the drivers of the current rate and the fact that it can be sustained. I mentioned this time is different. Again, the improving macroeconomic situation. Inflation is coming down. I mentioned the reserves again. the fiscal is, improving. And then on top of it, we also have seen that, globally, owing to the uncertainty, you have seen the dollar itself weaken. So that is the external side. And so far, that is the only reason I have mentioned that relates directly to the side coming from the external, environment. But on the whole, if you look at it, the drivers of the current performance are fundamental. Policy choices or reforms that are being undertaken, supported by the robust FX inflows. These are things that are within our control. What is happening with the global uncertainty, that is outside of our control. On the whole, putting everything together, you will see that the outlook for the currency is quite, bright, really positive.
Doc, are you quite optimistic that all these things that you have spoken about could take this currency on that long journey, some would say?
Exactly so, but we are also mindful of we are not just looking at the nominal rates. Of course, the earlier overshooting would have really been getting corrected. But what we care about more importantly is the real exchange rate. We also are aware that when the Cedi, especially in real exchange rate, terms, over appreciates, that can also hurt
the economy.
The economy in some ways.
Yeah.
And from where we sit, we look at all of these things before we really move. We are not targeting the exchange rate. All we are doing is targeting inflation. And to the extent that, whatever level is consistent with the inflation target, that's what it is. Demand and supply.
Some have said that we should be more heavy on stability than the strong rallying. And that is the concern for many analysts as well, that let's look at how you do the +1 -1 or +2 -2. The strong rallying is not good for the economy.
Well, the strong rallying may have just come about as a result of an earlier overshooting. Obviously, stability is what we all, hope for and are working towards. I'm sure after the correction at some point, you will see, that it gets to a level where, if it is once it's consistent with the rest of the macro, you will see, quite some good stability, around that level. But at the moment, it's actually just responding to the policy choices, but also the fundamentals.
But I believe that the Bank of Ghana is not sitting down and just watching. I mean, just like how you've intervened in the past to help with the Cedi. What would the Bank of Ghana, and I know you do your modeling and your forecasting, if you share with us too, is the Bank of Ghana looking at any numbers here to ensure that when it gets to this number, we may have to then stop and say that, no, we are not going to allow the forces of demand and supply again. A market correction is needed.
Well, we do not have a specific exchange rate target in mind, as I mentioned. But that does not mean that we do not watch the trends carefully. As a matter of fact, we are particularly more concerned about the real exchange rate. That's the nominal exchange rate adjusted for relative prices. That's what ultimately, if it is misaligned for a long time, can hurt other parts of the economy. And we are very mindful of this metric. And so all we are doing is to ensure that we are not overappreciated or overdepreciated. So what you would have seen happening now is just responding to the policy choices in a way that aligns with the rest of the fundamentals.
Because, Doc, if tomorrow we wake up and the Cedi, 1 Ghana Cedi, or maybe $1 is to 6 cedis, obviously you would meet with your boss and your team to say that something has to be done, because the strong rallying doesn't correspond with a lot of market development and fundamentals.
Well, not necessarily. That will move, it will move that way based on some other factors. If the driving forces are fundamental, if for some reason inflation, adjusts swiftly down because of, expectations and the fact that the policy stance is right, you don't want to throw in any, distortions in the market correction. So all we are doing is to just ensure that the movements are in line with the fundamental and ensuring that we don't build imbalances that are unsustainable. If you do that, then that is when it will be short-lived. But as long as you do not create any distortions in the market and you let the forces of demand and supply take place, then that can sustain the rally we see and the stability that we all yearn for. And that is exactly what we are doing. And we hope to ensure that, in all of these things, sustainability, stability are our watch words.
But also, if tomorrow it gets to 5 cedis to $1, will we still not see anything from the Bank of Ghana? Bank of Ghana will say that, oh, let's allow demand and supply forces to dictate. The 5 cedis to $1 could come with some serious shocks for the economy.
Well, the beauty of this is that the cedi by its own cannot just move that way. Something else will also have to move. If you let the cedi move, just detach itself from the rest of the macro, that will be short-lived. And that is not what we are doing. If the cedi for any reason moves to 5 cedis because of other adjustments, suddenly we accumulate reserves in excess of 6 months and it's bringing a lot of confidence in the system. Inflation is adjusting very rapidly down, perhaps to single digit, and then you have the foreign exchange market also responding to all of these different signals. That way you don't want to really come in to create any distortions. What we will not do is to sit down and see a scenario where the cedi alone moves without the rest of the macro. That way it will not be sustainable. But what we see at the moment means that it's really moving with the rest of the macro. Inflation is coming down, the fiscal is adjusting, we have monetary policy stance that is very tight, our liquidity operations are really very strong. And so all of these things are really shaping the expectations that we see. Mind you, the market is smart. The market players know exactly what is happening. If they do not trust your policies, then you will not have a sustained stability in the market.
Doc, let's bring up some of these issues that is raising questions about the sustainability issue. The Standard & Poor's in their latest report on Ghana raised questions about the second half of the year, and they see a depreciation coming in there. What do you make of a report like this based on the work they've done on the economy, and which feeds into the concerns that what is happening now is not sustainable?
Thank you very much. So I've looked at the report quite closely. And the report is based on a number of assumptions that they make in the report. So if you look at it, for instance, they think that somehow there's going to be some fiscal constraints arising from debt service challenges. Now they also talk about inflation persisting along with others. Take the first one, for instance, the debt and fiscal constraints. You will see interest rates have already come down quite a lot. What that means is that it kind of eases some of the burden on the fiscal debt service, interest payments, for instance. Look at the recent trends in the exchange rate. And I'm sure somehow I even heard you mention that debt service is easing, and under the program we're actually moving faster than to the debt to GDP ratio as a result of some of the dynamics, growth being high, but also the fact that the foreign currency deposit component is coming down quite a lot because of the developments on the foreign exchange front. So putting all of these things together, you will see that the fiscal position that they would have assumed is not exactly what the situation is now. And given the strong commitment to fiscal consolidation, that should mean that that risk is very small. Look at the monetary policy stance, which is very tight now, and rightly so, to re-engineer and actually strongly drive inflation to where we want inflation to be, 12 or even below 12 by the end of the year. What this means is that some of the risks even to the fiscal are going to even ease more. And so if you put all of these things together, you don't get the sense that the Cedi will be coming under any pressure soon. And that's even not looking at our buffers. If you take our buffers into consideration, then you can rule that out, you know, to start with. And when I talk about our buffers, these are buffers that are organically, you know, accumulated. They are not debt, you know, driven buffers. These are organically accumulated buffers that we have in our currently. So what that means is that we can respond at very short notice to whatever shocks we have, you know, coming in, and we will still continue to.
Doc, let me bring up another development as well. China and US are close to having a trade deal that had an impact on the dollar, that had an impact on gold. There are some again who are worried that if the dollar starts recovering, we could see some pressure on the Ghana cedi. There are some also worried that when the US finally closes the deal with China, the rallying towards gold would cease, and that strong reserves, that strong returns you are getting from soaring gold prices would decline. And all these scenarios could again fall back and have a negative impact on the Ghana cedi. What do you make of these concerns, first about the dollar picking up rallying, one, and also gold prices slowing down, which will again impact on what you're going to get for your reserves?
Yes, that risk is there, but I do not see it, you know, really affecting and changing anything in the current circumstance. You would have seen that this week the dollar has started, you know, strengthening, but at the same time you've seen the Cedi rally continuing. So that means that we do not have one-for-one, you know, correlation with these developments. It again depends on your fundamentals as well. Your reserve buffers to withstand some of these shocks, but importantly, what is your policy, you know, position? These are all important to insulate the economy from the rest of the shocks. The shocks will always occur. Absent the trade deal, that is not even the only, you know, shock that will happen going forward. The shocks will always happen. The thing is, how prepared are you to withstand some of these shocks? And that is why our focus has been to really, you know, have a lot of buffers. Buffers to withstand, you know, some of these shocks when they do occur. Besides, a practical thing coming from financial markets is that people are talking about gold prices suddenly coming down. If you look at the bullion, the fiscal gold stock that we have in the reserve composition, that's just about a third of, probably less than a third of our reserves. So the impact already is not as much as, you know, we do. A lot of the operations are already denominated in the US dollar, and that's far more than the you know, bullion that we see published all the time.
Doc,
so that risk is...
Doc, there are some proposals that maybe looking at what has happened to gold, and for us to ensure that we manage any fluctuations. There's even talk about maybe hedging, maybe for the next 6 months as well. This is something that the bank will consider just to manage the volatility of anything that will happen for the next 6 months or something.
We are very much aware of all of these things. We are reviewing the situation. As a matter of fact, we even have proposals we are looking at closely to look at the merits and demerits. And we are really, really, you know, considering all of these different, you know, dynamics. Although that risk is not as pronounced as it, you know, seems to be mentioned outside. But we are not, you know, leaving it we are still considering all of the different options.
So when we come back, we want to look at inflation, how inflation is going, whether indeed we can meet the target of 12%, and all these developments as well as you try and wrap up on this interview. This is PM Express Business Edition to look at the city's stability and sustainability concerns, engaging the first Deputy Governor of the Bank of Ghana, Dr. Zakari Mumuni, get his thoughts on what the Bank of Ghana is doing to sustain this good run. We'll be right back after this break. Welcome back to PM Express Business Edition as we look at the city's stability and whether it's sustainable or not. What is the Bank of Ghana doing on the monetary side to ensure that the good run that we are seeing is indeed sustainable with all the concern that people are raising. So, Doc, just back to you again on the market as well. For you, what are you on every day telling the commercial banks? What are you on every day telling the business community that engages you? Because there are still concerns. I mean, you have talked about the data, what you're doing. And this joke always in the past that they say that Bank of Ghana has the rate, Abuchi has the dollars. Now you have built the reserve so much. What is the communication, the engagement, and the data positioning to, one, the commercial banks, the financial markets that you engage in, to let them appreciate that things are changing, or to use the word, the Bank of Ghana has turned the corner?
Well, thank you very much, George. Maybe now you probably can also say that, instead of saying Bank of Ghana has the rate and Abuchi has the dollar, you probably will not be wrong if you say Bank of Ghana also has the dollar now. So we have the dollar, and that's what it is. We continue to build a lot of buffers, and we do so with a view to withstanding, building resilience to withstand whatever shocks may happen in the globe. I mean, across the globe, you are increasingly seeing a lot of uncertainty. Quite, some heightened uncertainty, coming from either trade, wars or geopolitical tension, and all of that is affecting, developments. And so what it is building, resilience is an important one. And how do you do that? By accumulating reserves, which is what we have been doing. But that's one side. The other side is to ensure that you do not build imbalances in the system. And this is where you have policy choices to make. Is the monetary policy stance, for instance, appropriate? That is under our remit. And we have to ensure that the monetary policy stance at all times is appropriate. But that's one side. The other side is, what are the fiscal policy choices that are being made? Is there some consolidation that is taking place to put public finances on a sustainable path? All of these points work together to generate the confidence that you need in the market. Mind you, market watchers have access to all of these pieces of information. When we come out to publish our reserves, for instance, they see where we are. When the fiscal numbers are published, they can read them. Again, they know what the stance of monetary policy is. You have very sophisticated investors who come to put their money in your economy, and they understand all of these things. And to see the developments as we see now, that must, really send a signal that something is right. And that is where we are.
So you believe that with all these things, you are engaging them on a daily basis and all the rest to deal with the information gap that often also feed into the activities of speculation and all those things?
As a matter of fact, I think we place a lot of emphasis on information dissemination. Just in a week's time, we will be having the Monetary Policy Committee meetings. Following these meetings, I'm sure we'll be coming out with a lot of publications. First with the data, which gives market watchers all the information they need. That will be followed by the governor's statement, the press release, which gives information on the economy and where we are as an economy. We follow this up with the recently introduced position statements of the individual MPC members, and that again gives a lot of information. Besides, then you also have the publication of the monetary policy report itself, which gives a comprehensive view of all the developments. So we take transparency, which is actually key under the current inflation targeting regime, seriously. And that's why we have all of these different outlets for communicating with the rest of the market. Besides that, as we sit here now, you also have our colleagues in the markets interacting with the market. Surveillance, but also key, interacting with the players on the foreign exchange market, providing them information, whatever they do not understand, providing and working together to ensure that market conduct rules are really strictly adhered to.
So all these things you think would deal with those problems. Doc, there are some who are seeing that, and I know the Bank of Ghana in several times, and Dr. Johnson, the same, even the recent discussion made that point that they don't want to get into a control regime, and that is never on your table. There are some also saying that in your quest to close the gap of ensuring firm stability, it's about the strict enforcement of the foreign exchange laws, the Forex Bureau space, the legal market and all those things. And some are saying that even there was a discussion I had last week, and one of my panelists said that maybe the Bank of Ghana should look at how they can bring their butchers into their fold and all the rest and kind of regulate them, because when they see their fingers bent, they will react as well. What is the BOG, also Bank of Ghana, doing in trying to enforce the FX laws, the quoting of prices in dollars locally, and all those other extraneous quote issues that also feeds into the city stability? First, about the Forex Bureau space, given the black market as well. What is BOG doing in that space to ensure that, even though now we have strong reserves, so yes, we can go and sleep, but activities in the black market also feed into the performance of the Ghana city?
Well, that's very true. But when you see those activities be, increasing, that's just a signal that something is not right. If you have stability as we currently have, I'm sure you will see much less activity on that segment of the market. As a matter of fact, yesterday we met with the Association of Forex Bureau Operators. Their executives were here to have a meeting with us, and they have a few concerns as to how to modernize their own operations, mindful of the Foreign Exchange Act and all the guidelines. And we are looking at some of the points that they make. But the key thing, fundamental, is to ensure we have stability. And when you have stability, all of these other peripheral challenges you have will be minimized. You perhaps will not be able to eliminate them completely, but they will definitely be minimized. And that is only when you are able to maintain durable stability. Yes.
You think that for you, the most important thing is stabilize the local currency, ensure confidence in the local currency, all the other things will fall in place?
Precisely the point I am making. Just this week, Governor was sharing an experience with us when somebody was going to buy, a vehicle and went with dollar bills to buy it. And then the vehicle, seller said they didn't want, he should come and pay them in cedis. He went to the Forex Bureau to ask that they change this Forex into cedis for him. And when he got there, the rate they were giving him, because they were also expecting the rate to still fall, was so low that this person
more dollars to still get that same quantity of cedis.
Precisely. So at the end of it all, it just depends on how well you manage the overall macro, and then confidence will come to the city, and you will not force anybody to hold the city. They will hold it.
So you believe that build confidence in the city, and that is what you think you're doing now?
Precisely what we are doing.
Do I get the impression that, and from your colleagues who are financial market who feed you the data as well, are we seeing that sudden shift from people who were in the past quoting stuff in dollars, demanding dollars, now gravitating towards the Ghana cedi?
This is what is happening
on the market.
And when the stability is sustained, you will even see more of that. Precisely what is happening, and it will be in your own interest to do so as a business person.
What advice do you have to the business people out there? Let me use the expression about the Dalton Thomas. And even to quote the executive of one of the Ghana Private Road Transport Union, and even GPRTU, yes, and then even GUTA as well. They said that, George, we have seen this in before, and therefore we are not moved by what the Bank of Ghana is saying. We are not moved by what government is saying. You deal in this space. What is the direct response to individuals out there who are saying that we are not moved by these things? We have seen it before. The next thing we'll see is a strong reversal, and we are back to 1 Ghana cedi, 16 Ghana cedis to $1.
Definitely no, we will not get there. And I thought you should probably be the one advising them in this case, because then by now you would have seen that when we had this conversation much earlier, a couple of months earlier, and we talked about where things were heading, you doubted it.
Yeah.
Today we are there, right? So there's no need to doubt at all. We have what it takes to maintain the stability, and we will stop at nothing just by, we will just stop at nothing than ensuring that we have, durable stability on the foreign exchange market. We have what it takes to do that. If you look at our buffers, if you look at the policy, stance, and everything that we are doing, other reforms that we are undertaking within the foreign exchange market, all of these should really bring a lot of confidence and, of course, durable stability on the foreign exchange market. And there's no need to panic at
The
all.
commercial banks are saying one of the reasons why you reviewed the cash reserve ratio when it comes to the foreign holdings was stabilizing the cedi. And they think that now it's more expensive for them to hold FX when it comes to deposits and all those things. Is there any consideration to take a second look at this cash reserve ratios when it comes to the FX and all those things, looking at what has happened right now? Because I know they've been knocking on your doors also, always. So what is the Bank of Ghana's response to these commercial banks, especially when it comes to the FX holdings as well?
Well, policy is not a static, event. It's a dynamic one, and we look at the numbers at all times to take one decision or the other. The assurance, though, is that we are looking at the numbers again, and if it becomes necessary that some adjustments are made, those will be made. But let me add quickly that with the current trajectory of the developments on the foreign exchange market, it's even better for them, requiring them to keep for the reserves in cedis. So what it means is that with the cedi appreciating, they are actually required to back the foreign currency deposits they have with less and less cedis. So in this particular case, I'm sure you will not get anyone, really complain. But we are looking at the numbers, and if the numbers, show that there should be any adjustments, why not? We will not hesitate at all.
12% inflation end of the year. There are some who are saying that it is quite an ambitious target. How do you respond to those who say that, yes, because if I look at the data from the IMF, the World Bank, and all these external institutions, they are more moderate to their projections. What do you tell those who are saying that it's too ambitious?
I don't see it exactly as being too ambitious. It is something that is within reach, perhaps even better. If you look at, again, what is happening, currently on our markets, that just, gives, you would have also seen our policy stance. Again, I keep mentioning this, and it's all linked. Now, aside that, you will also see that there are also some steps that are being taken to deal with the food side of it. Should these, activities that are being taken to address the food price situation yield some fruits, that should even be moving us far faster than we would have anticipated in the disinflation process. Yes.
You see, there are some who are even projecting that we could, on the other side, hit our single digit target this year.
That is not out of the equation. If the food side were to adjust as expected and then complement what is currently happening on the other side, that should really be getting us, very fast towards where we want to be. Our medium-term target of 8 plus minus 2. That should be moving us there faster than we anticipated. At the moment, we think by the end of the first quarter of next year, we should be within a single-digit, bracket. But if you have, favorable conditions than what we have assumed under the current, framework, that should even move us far faster, to this target than anticipated.
So, Doc, you are quite optimistic that the target this year will be achieved when it comes to inflation.
I am optimistic. There are risks, but the risks do not warrant any doubt at this stage. I don't see it at this stage. We still stand the chance of, meeting the target, given the developments that we are seeing. The next thing you would have heard of, the Guta and the rest, having to talk about the price, decreases. That's not alone. You might also see it reflect in petroleum prices. These can affect a broad base of activities in the economy, and so all of these working together will let us, achieve the target. Yes.
The inflation thing, you talked about the risk, and Doc, there are some who are worried that it comes to further tightening, and that could also come with some shocks with policy rate hikes and some shocks for the market as well.
No, we do not see, that. There are risks around the inflation. For instance, the geopolitical.
As in the tightening that
reviewing the data, quite closely, and then at all times we will base our policies on what we see and then the outlook. Will the outlook warrant any further tightening, or will the current stance be appropriate? That will be assessed at the meeting, and where we'll take the right decisions. At the last MPC meeting, you saw what we did. At the time, we saw the need to tighten policies to re-engineer the disinflation process. You would have seen that happening already. But importantly, you would have also seen that accompanying that with our strong liquidity management is getting all of the developments we are seeing on the foreign exchange market. Yes.
So, Doc, as we try and wrap up on this discussion, there's one quick clarity I just want to get a bit about the cryptocurrencies. Are we still working towards the end of year target as the governor said? Because there's someone saying that why don't we still concentrate on virtual Cedi, the ECD, which has delayed? Are we still working towards the end of the year in terms of the regulations that are taking off?
Well, yes. That's what the governor announced is exactly what we are working towards. And we are not doing it alone. We are actually working with other regulators, for instance, the Securities and Exchange Commission, so that we have a holistic view of the developments.
But some are saying that it's still quite a risky area. Some are saying that the Bank of Ghana wanting to open up the door for it.
That is why we want to, really study and understand all of these things carefully before coming out. We are not just beginning. It's something we have been looking at for some time now, and we are working with other regulators to have a full view of the development so that we can properly regulate the sector.
But ECD, what is happening to ECD? What is going to happen to it? Is it still in the works, or is it definitely
in the works. I'm sure you know where we reached with the test run. So we have conducted one test run, and given the heterogeneity of the country, we think that we need further, test runs to just be very sure that once it's rolled out, we don't have any challenge with it. And trust me, the central bank always takes its time to come out with anything. So that by the time we come out, we are very sure that this is the best that could have happened under the circumstances.
Are we looking at likely next year now, or it's this year still possible?
In terms of the timing, I'm sure colleagues are working on the next phase of having to do pilots across the rest of the country. And so once those are completed, it depends on when that is done. Once it's done, then we will then move to having it rolled out. And that will add another layer of the financial inclusion and then the digitization of the economy as well.
Doc, your final words to the business community out there. Your final words to, if you look in the camera to talk to them, the business community out there, the loving you doors out there about what is happening with the city, and what assurance, the firm assurance, if tomorrow they can hold Dr. Zak and Dr. Siama and Matilda Santos' word to it, collectively as governors, in terms of the outlook.
The bank is resolved to ensuring continued stability on the foreign exchange market. We do have what it takes to do this, and we will also ensure that policies that are implemented actually support a sustainable trajectory for the city. And so there's no need at all to be worried about what is happening now, or to even panic at all. Just rest assured that we are putting in place all the measures that will ensure that the city continues to be stable going forward, and we will stop at nothing but that.
Doc, is the fiscal front also helping the monetary as well?
Precisely so, and we still expect that we will have some complementary effort from that side. That's very important, because and so far that's where one of the things that we've actually had working quite well for us, the increased coordination of the policies. So you see, on one hand, the fiscal is beginning to reconsolidate, and then on the monetary policy side, we are also on a very tight stance, just to ensure that we get the disinflation process process firmly, in place before we can, start any easing. We want to be very sure that we are firmly on a disinflation path, and that will come from all the different, policy strands: fiscal policy, monetary policy, and structural reform, to ensure that revenues and the rest are, maximized.
Look, at the end of the year, I'll come back again and I'll be watching closely the market, what will happen to the Ghana, see what the outcome. Bringing the Bank of Ghana, its stone. I'll come back with the Pelton stones on the Bank of Ghana. Doc, I appreciate your time so much, and I'll definitely be back again to get more on the Ghana. This has been PM Express Business Vision, engaging the first deputy governor of the Bank of Ghana, Dr. Zakari Mumuni, on the city's stability and the concerns about whether it is sustainable going forward. What is the Bank of Ghana doing to complement the fiscal and even the multiplicity of monetary measures to firmly stabilize the city going forward and even to the end of the year? The debate was to go on in your offices and your homes about whether the Bank of Ghana has done what it has to do, or there's still